In 2018, I purchased an investment property in Launceston for $193,000. 2 years later, let's see how this property has performed. Hey guys, welcome back to the channel. If you haven't already, please like and subscribe. You will really help out the channel so I can keep bringing out content just like this for you guys. Now, let's get into the video. I'm going to break this video down into two parts. The first part will go over my reasoning behind my decision to invest in Launceston. In part 2, I'll go over the numbers and performance of this property, and I will add timestamps for your convenience. Just a little bit about me. I've been very fascinated by real estate from a very young age. My mom purchased our family home when I was 13 years old, and it really taught me the importance of saving and investing my money. As a result of my upbringing, I've been investing in real estate since 2015. I now have a portfolio of 8 investment properties all across Australia. I wanted to make this video to share with you guys my personal experiences, as well as give you guys some tips and motivation to start investing yourself. Let's start with why I decided to invest in Launceston. I have always been interested in the major Australian markets like Melbourne and Sydney. However, these markets were just a bit too pricey for me. Another thing that really discouraged me from investing in Melbourne and Sydney was the fact that despite the low interest environment that we are in right now, most of these properties still have a negative cash flow. This means I'll have to contribute hundreds or even thousands of dollars every single month just to service the mortgage because the rental returns are just so low. My investment goal from the start has always been to build up a portfolio of investment properties so I can comfortably retire from the cash flow in 10 to 20 years time. So having negatively geared properties would really slow me down. Having to contribute so much money every month to service the mortgage, it means I'll have less money to save and less money to put towards my next house deposit. Since I couldn't find cash flow in Melbourne or Sydney, I directed my attention to the other states. This was when I began to look into the Hobart property market and realized that there was a massive rental shortage in this market, meaning the rent will likely go up in the near future, which it did. And the higher rent will likely attract more investors, which it did. After I purchased my investment property in Hobart, I saw the Hobart property market go absolutely crazy. The competition was becoming pretty intense and most properties were selling well within a week. And because of this, I realized that Hobart was becoming too heated for me to find a good deal. So I turned my attention to its smaller sibling, Launceston. And this was when I found this beautiful property. After a lot of research, I realized that Launceston was also a very good rental market. And my research proved to be correct. The rental income for my 2 investment properties in Launceston have been going up very steadily since 2008. At the time, Launceston was a buyer's market and sellers were very keen to sell. But I knew it was only a matter of time before investors realized the opportunities that were in Launceston. We are talking about rental yields in excess of 6% here. If you would like more details about this, please leave a comment below. Now let's get into part 2. Now that I've gone over my reasoning behind investing in Launceston, let's go into the performance and the numbers of this property. So this is the property I purchased. I know it doesn't look like much, but the numbers behind it are very impressive. This is a weatherball house built in the 1920s. Yes, you heard it right. This house is almost 100 years old and it is still going strong. But I do plan on doing some work to it in the near future to add some equity to the property. This property has a very simple layout of 3 bedroom and 1 bathroom and is on a land of around 300 square meters. This property is located in a suburb called Mowbray, which is about 4 kilometers from Launceston CBD, or about an 8-minute drive. As we can see here, it is surrounded by a lot of nice amenities, including a primary school, a bunch of supermarkets, and my favorite thing about this property is that it is right next to a university. It is also right next to Invermay, one of the best suburbs in Launceston, where the average price of a 3-bedroom house shoots up to $330,000. Now, let's get into the numbers. I purchased this property for $193,000. I put down a 20% deposit, and if we add in stamp duty, legal fees, bank fees, and other costs, we get a grand total of $46,300. Based on the estimates provided by CommBank and realestate.com, this property is worth around $233,000. giving us an 84% return on investment after just 2 years. The return on investment is not as crazy as cryptocurrency or Afterpay, but it is definitely better than money in the bank. And now for the best part, the rental returns. Most properties in Melbourne and Sydney have a rental return of around 2 to 3%. Let's calculate the rental return for this property. Based on the current rent of $265 per week, this gives us an insane rental yield of 7.1%. That's double what I would have gotten investing in Melbourne or Sydney. With numbers like that, it is no wonder why the Hobart and Launceston property markets have been going absolutely crazy in the last few years. With that said, I just want to clear a few things up before I end this video. First of all, I am not a financial advisor. I'm just a guy who makes YouTube videos. Second, I know this strategy might not be for you. Our goals and circumstances are completely different. What works for me might not work for you. And finally, properties in Melbourne and Sydney have performed better over the long term. I guess what you have to decide when you create your investment strategy is that, are you willing to have a loss of around $300 to $1,000 every month in the hope that your property will grow in the long term and make back your losses? That is essentially what negative gearing is. You're making a guaranteed loss through interest payments right now in the hope that you make back your losses in the long term through capital growth. I personally prefer to just take the cash flow. This puts more money in my pocket every month so I can save up for my next property and the one after that. Again, this is only my personal opinion. I do encourage you guys to do your own research and come up with your own personalized investment strategy. I would love to hear your opinions in the comment section below. What investment strategies do you guys prefer? And that brings us to the end of the video. Thank you for watching till the very end. If you found any value at all, please do me a favor, hit that like button, comment and subscribe for more content just like this. All right, I'll see you guys next week.